Hello, my friends. It's Yara Vinay from Arcadia Economics joining you on this lovely Friday. And I'm so honored and happy to get to interview Dave Kranzler. Good morning, Denver. Dave, welcome to the show. How are you doing?
The lovely Yara on a lovely Friday morning here in beautiful, sunny, mountainous Denver, Colorado, or golden for me. Pardon me?
I said, sorry, you're golden, Dave, now,
Yeah, I should be golden, Dave. I don't live in Denver.
right? Well, it's also appropriate because I like to talk to you about gold. So that's better than Denver, Dave, which is just location based. So
Yeah,
um,
everyone on Chris's channel just wants to talk about silver, but I like to talk about silver and gold. I own
cool.
both.
Well, we get to do that today. And I'm excited to get to do this with you. I know that one of the things that happened this week was the non-farm payroll report. And so I wanted to start with that, and then we can move into the precious metals, if that's cool with you.
Sure. Yeah, no, that's a timely topic since it was released this morning. And the numbers, the headline new jobs number came in considerably higher than the consensus estimate. And it's a total BS number. I'll just say that at the start. I'm sure everyone in the audience knows that. So I don't want to belabor too much on it. It was interesting because a pattern I've noticed probably at least over the last 12 months, maybe even longer, because I don't formally keep track of it, but it seems there's also the ADP payroll report that comes out on Wednesday before the non-farm payroll report.
Okay.
Okay, so an ADP uses W-2, because it processes W-2s for most businesses.
Okay.
So it has a pretty good statistical grip on new jobs that have been created, presumably. But interestingly, they still use the same seasonally adjusted, hokey pokey annualized rate algorithm that the Bureau of Labor Statistics uses, the government. So it's a suspect number also. And the ADP report came in with a lot less jobs created during July than was expected. And a pattern that I've noticed is that it seems like when ADP misses or beats, the non-farm payroll report beats or misses. So it does the opposite of what ADP does. So I told some people yesterday, I said, hey, ADP missed pretty badly yesterday. So I would bet the non-farm payroll report is going to beat, which it did, and they're going to hammer gold and silver. And they're going to try and get gold and silver as low as possible ahead of the prime Indian gold buying season, gold importation season, and also ahead of the fact that at some point the Fed's going to have to wave the white flag on its taper bluff and its interest rate hike bluff. So, and I also said, I guarantee, if I'm right, gold and silver are going to get smashed. Lo and behold, at 6:02 a.m. Denver time, the price of gold was dropped from 1804 down, and now it's trading at 1763. So you're talking about, that's a $40 drop from the high. But I want to make one thing clear, and I'm just talking about gold. Same applies to silver. Silver's getting massacred also.
Okay.
This is all happening in the paper derivative market of the COMEX. It has nothing to do with any kind of trading that's going on in physical gold and silver. Okay. And what makes their manipulation effort a lot more effective is the fact that it's being done on a Friday in the summer. Okay. So first of all, Fridays tend to be lower volume, and summers, especially August, tend to be lower volume. But most important, this is being done after the physical trading markets of the world, which are mostly in the Eastern Hemisphere, if not entirely in the Eastern Hemisphere, because we can't call the London market a physical market anymore. Those markets shut down by 3 a.m. East Coast time. Okay. So, over there, they're like either at happy hour, having dinner, or getting ready for bed. So my point here is what you're seeing here on your screens with the price of gold and silver is happening completely in the paper derivative phony gold market. And I can guarantee you the only gold and silver that was sold during this sell-off was the gold and silver bullion products that coin dealers sold to retail investors, because I'm positive a lot of people are using this opportunity to call their favorite coin dealer and stock up on more gold and silver. It'd be interesting to hear what Andy Scheckman has to say about that, because certainly he would have a read on that.
Yes, well, we'll get Andy's feedback on that. I have a question about the numbers. You were saying that one is inverse to the other. Are there any numbers that we can actually trust? And I mean, literally, is it all just for show or for the reaction, or are there legitimate numbers out there when you see them that you're like, yeah, that's something I should pay attention to for real?
I mean, government reports, generated reports loosely, not the non-farm payroll, not the CPI report, and not the GDP report. Those are highly manipulated, highly polished for political purposes. So what kind of is blowing my mind about today is the fact that, so presumably a much stronger than expected employment number means that, oh no, the Fed better raise interest rates, the economy's overheating, look at all these jobs created, which is total BS. And they're smashing gold and silver, but the Dow is up 120 points. I mean, the 10-year Treasury bond is up 7 basis points. It's back up to 128. It hit something like 112 or 113 earlier this week. So, I mean, the typical correlation there is when interest rates spike up like this, all the stock market gets hit, along with paper, gold, and silver. So, I mean, this alone tells you there's something goofy going on. But I also drilled down. I haven't completely finished looking at the NFP report. It's such brain damage, I don't spend too much time on it. But I was just curious to see what the birth-death model showed. And for those who aren't aware, the birth-death model is a hokey model that the BLS dreamed up. And what they do is they try to estimate the number of new businesses formed in a given month, less than the number of small businesses or new businesses that went out of business. Okay. And the birth, and they say it's right on the report itself. It's an estimate. And they were estimating something like 224,000 of these jobs that was in today's headline number came from the formation of new businesses over and above businesses that went out of business and fired people. So, I mean, it's a total BS number. It's a pad number that they use to manipulate. It really helps them, goal seek the report. I don't know what their goal is with producing a stronger than expected number today, other than for sure to get the price of gold and silver down in the paper market. But that the new jobs supposedly created by new businesses formed represented 23% of the headline number. And that's total bullshit. Because, and Colorado, Denver is one of the hotter economies, one of the relatively stronger economies around. And everywhere I go, and not just in downtown Golden, I was in downtown Denver the other night and was walking all around going to a Rockies game. And I noticed the same thing. There's a ton of commercial space, street level commercial space, where there were formerly small independent businesses that are no longer there. And the storefronts are still for lease. And my point here is I'm seeing very few new small businesses being formed. And so that's why that birth death number that they use is probably a total fraud.
Even if they were basing it off of last year's numbers, then that would have been lower because everything was shut down because of the lockdown. So yeah, how are they getting this information? How are they supposedly?
It's a guesstimate. It's an estimate. If you read the small print in the BLS reports, most of the numbers that they put together are estimates. And I would bet that next month, when they report September's number, there will be a big downside revision to August's number, but no one pays attention to the revision.
Right.
That'll be long forgotten.
The headline is all that matters, right? Nobody reads
exactly.
the follow-up later.
But also just one more thing to answer
Yeah.
your question about, are any of these numbers trustworthy? Let's just put it this way. So you've got during the course of the week, on a weekly basis, you got a bunch of economic reports that are generated by private sector businesses. And the numbers that are being generated, or the reports that are generated with input from private businesses, public companies, large corporations, whatever, it's showing the exact opposite of what the non-farm payroll government generated number showed. You're seeing in a lot of these indices, economic indices, businesses are starting to shed employees again. Not talking about large corporations. I mean, obviously, there's still at the grassroots level. There's you see help wanted signs everywhere, but it's mostly at fast food restaurants and other types of jobs that no one wants. So the data and the economic activity reports coming from the private sector, new home builders, I mean, just look at auto sales for August. Those are starting to fall. You just look at the major sectors of the economy, and economic activity slowing down considerably. The Cass Freight Index is starting to hint that we're going back into an economic recession. I would argue we never really came out of it. But so my point here is that my best guess is that maybe there's probably some new jobs generated during July from people who kind of have to go back to work because they're losing, they got cut off from supplemental government, emergency virus subsidies. Mm-hmm. But I would bet that the true number of new jobs created wasn't anywhere close to what the headline number showed. And so I also think that this is probably not a bad opportunity for people who haven't already overinvested, in the precious metal sector. If you got a lot of cash that you've been looking to put to work in this sector, now is probably not a bad time to do it.
Awesome. One thing I was wondering is why would the metals be getting targeted based off of the NFP report? You said that the numbers come out and then metals get smashed, and that's
well, they get smashed whether the number is good or bad. It's just automatic. I'm serious. It's like the bullion banks are sitting there, right as the headline hits, they drop a payload of paper contracts into the COMEX, onto the COMEX floor and into the Globex trading system, the electronic digital system. And what happens is they set off stop losses that hedge funds that trade the COMEX contracts with algorithms, they set off the stop losses. So the banks dump a bunch of paper and it triggers hedge fund puking. And that's why you see what looks like a freaking fishing line off a high dock or off a bridge in the chart today. And I'll send you a copy of this chart and you can splice it into the podcast. But and I would guarantee you that the banks that shorted paper gold up at 1800 and probably into the high 1790s, they're covering now because they've got to. I mean, if you're talking about tens of thousands of contracts that were dumped, and you've got a $30 gain in your contract, that's meaningful monies for these banks, especially because a lot of them their other businesses are hurting right now. And that's another, the demand for commercial industrial loans from banks has been declining precipitously for at least the last 9 months, maybe longer. And so that alone is a barometer of economic activity, especially at the mid-sized businesses and local mom and pop businesses. In other words, companies aren't borrowing money from banks right now to either go into business or expand their business. And so that's the perfect example of a private report that contradicts the headline number that we saw today in employment.
I know that some banks had limited lending to individuals. Have you heard anything about there being a squeeze on the ability to actually borrow from banks if you are a business?
The data I have seen, there's a Goldman Sachs Financial Conditions Index. The financial conditions, and part of the equation there is the ease of getting a loan have never been easier in the history of the index.
Okay.
I think anyone regardless of their credit history, or any business can go in and borrow money from a bank. The banks don't care because the Fed ultimately bails them out if the loan defaults anyway. So there's not any demand because people aren't going to waste their time starting a business if they don't think there's a market to sell their goods or services into, and that's what's going on.
Cool. Thank you for helping me understand that one. Speaking of the Fed, I know there's been a little bit of taper talk lately. And so I was hoping I could get your hot take on that. What's the point of saying you're going to maybe raise rates in 2023, or why would they come out and say that?
It's jawboning. It's the jawboning to support the dollar and to create weakness and lack of interest in gold and silver. And that's all it is. Okay. I mean, I read, and I normally don't read the non-farm, I mean, the FOMC policy statement is freaking brain damage reading through it. But when everyone said that the June policy statement went hawkish, I read through it and I'm like, there's nothing in here that's hawkish. I mean, who gives a shit if they say they might start having a conversation about tapering at a future meeting? That doesn't mean anything. Or, hey, we might raise rates in 2023. Well, as Chris Powell mentioned to me the other day, the Earth could get hit by an asteroid before 2023. So, you know, if you notice, they don't put any definition on when they say they're going to taper or when they might raise rates. They throw out 2023 there and everyone gets all hot and bothered. But to be honest, the only reason that they would hike interest rates right now is if they had some reason for why they wanted to crash the financial markets, the stock markets, the credit markets, and the treasury bond market. That's the only reason they would start raising rates and they would taper. So, but you know, then I read the July FOMC policy statement, and it went full dove. And I posted a blog post. I think I talked about that. If not,
I think I retweeted that.
Yeah, I don't. Yeah, here we go. July 29th, I posted a blog post and I talked about the two policy statements and why the July policy statement is full dove now. So, you know, like I said, it's really, you know, it's don't listen to what I'm saying, watch what I do syndrome. And what they're doing right now is they're continuing to print a lot of money and pin the Fed funds rate near zero. And that's not going to change for the foreseeable future.
Okay. Well, they can say whatever they want, but there's no accountability anyway, right?
Exactly. So,
I mean, I could say I'm going to be 6'1" by the end of 2023, but it's just a statement. You know, I'm still going to be 5'2". So
that's a good analogy. I like that.
People can say whatever they want, but if there's no accountability, then it's really just headline creation to get the response that they want, knowing how people react to what they say.
Exactly.
Wow, that sounds pretty manipulative, Dave.
Well, our whole system is completely manipulated. It's you know, it's sad to watch.
Well, one way I know that people can get a better handle on what's actually going on is to subscribe to the Short Sellers Journal and the Mining Stock Journal, because you put out a lot of great research, not just about the companies, but about what's happening in total that would affect said companies. And
well, I appreciate that. I've had some nice hits with my Short Sellers Journal recently.
Yeah.
Because a lot of stocks, even though the indices are hitting new record highs all the time, more than half of the stocks, or roughly half of the stocks right now in the S&P, are below their 50-day moving average. And there's you know, some of these goofy NASDAQ stocks have been getting hammered over the last couple of months. So I've managed to pick out a few of those. I've had some that have gone upside down on me the wrong way, but so in the next issue this Sunday, I'm going to dissect Carvana's numbers. Carvana is equally as fraudulent in its accounting as Tesla is, and it's running out of cash again. So it's going to have to probably sell more stock soon. So, and then the Mining Stock Journal, my latest issue went out yesterday, and
I got that. I haven't gotten to read all the way through it yet because
well, you better read it on your plane ride today.
I will. I will for sure.
So, and I feature a profile and a recommendation on of an early stage silver junior miner that's advancing a silver gold project. And then I also have believe it or not, a large cap silver gold producer that I've put a strong buy on. It's not working well today, but I actually doubled down in my call position. So I'm already green on what I bought today, but down on what I bought earlier this week.
Well, day to day, but trends. So if anybody is interested in finding out what Dave's picks for this week are, you can go to Investment Research Dynamics and sign up for the Mining Stock Journal. Or if you're interested in the Short Sellers Journal, that would be, anything that comes out of Dave's massive brain, I would want a part of. So.
And I'll just say, once we get back on a bull trend here in the precious metal sector, I'm going to raise the price of the Mining Stock Journal. People have been telling me for years I should do that, but existing subscribers will be grandfathered at the current rate, which is $20 a month.
Well, that's a good incentive to get in now, especially before the bull market, right?
Well, we're in a bull market.
Well,
we're just waiting for the next bull. Yeah, exactly.
Yeah, gotcha. Is there anything else that was on your mind that you'd like to share today before we wrap up?
Yes, I'm excited to get my weekend started.
Woo!
Even though I'll be doing a lot of work.
Right on. Well, I so appreciate you joining me today, and I hope that you have a fantastic weekend. And everybody who's interested in the Mining Stock Journal or the Short Sellers Journal, please go to Investment Research Dynamics and get signed up for Dave's very affordable newsletter. He's very generous to share that information with us. And Dave, I did have one question for you. I noticed that your Mining Stock Journal logo went back to the truck full of cash and no longer the silver coins that I made.
No, when you click on it,
there's a reason for that.
When you click on it, the landing page has the truck with silver eagles pouring out of it. It was just too much work to change both. I'll have my web guy do it eventually.
That was just me being like, hey, where'd that go? Well, awesome. I hope everybody will visit your site and click on that. If they're not already a subscriber, now's a great time to get in at the grandfathered in price. And thank you all for joining us today. And Dave, I hope you have a fantastic weekend. And
thanks, Yara. You too.
Thanks for joining me today. It was fun hanging out with you.
Likewise.
Thanks so much. And everybody remember to like, share, subscribe. Where's the notification bell, Dave? All right. Thanks so much, everyone, and have a great day.